When we start talking about trading, we generally try to attempt to outperform the average of the market a little more actively. So instead of buying SPY and holding on to it and collecting the dividend and not worrying about whether it's going up and down, just being complacent in the fact it's going to go up over time, instead of doing that, for trading, we're buying SPY at a certain time, we're selling it at a certain time to try to take advantage of really shorter term fast gains. That would be something that's more like trading. Generally, when we're doing options, we're trading because options have an expiration time. I can't buy an option and just hold on to it forever and expect to collect income from it. The market either goes up or it doesn't, or if I sell the option, the market either stays and I collect my money, and then the option goes away, and then I do another option. So that's more in the trading department. And pretty much when we start talking about the bull trade, we're talking about trading. If we start talking about buying the IWM, which is what tracks the Russell 2000, then we're talking, and holding it, we're talking about investing.